Good morning. I'm David McGard, and this is Property Value, where I talk about commercial real estate focused on South Florida. It is Monday, April 11th, 2022. How are you feeling today? So, what is going on in the trades? I've got an article pulled up right here. It's a big deal, meaning that it is real estate roundup. FedEx leases 500,000 square feet in Medley. That's 500,000 square feet of Class A industrial property. This is written by Eric Bohansky from the South Florida Business Journal. And it goes like this. FedEx Ground, Tennessee-based FedEx Corp, secured a lease for 501,000 square feet of warehouse distribution space in Medley. Spokeswoman from Pittsburgh-based FedEx Ground said the company plans to move into the Miami 27 Business Park when the facility is expected to be operational. In an email to the Business Journal, Adams cited significant package volume due to e-commerce growth as the reason FedEx Ground entered into a long-term lease agreement with the facility's landlord, Duke Realty Group. Adams and FedEx Ground will hire a mix of full and part-time workers, contract package pickup and delivery services, and hire a service provider that will hire locally for driver, helper, manager, and other positions. Miami 27 Business Park has launched a speculative development in May 2021. It's part of a 34.9 acre industrial campus that includes a separate 221,000 square foot industrial building called Miami 27 Business Park at 1031. Duke Realty bought the swath of the land where Aloha Lumber was once located in January 2018 for $35.7 million. Big number. Duke Realty was represented by the VP of Leasing and Development in South Florida, David Launslager, as well as Aaron Byers and Steve Wasserman of Colliers International, where I work. A real estate investment trust, Duke Realty owns and operates 162 million square feet of industrial assets nationwide. About 9 million square feet are in South Florida, according to the company's website. Demand for industrial space has increased in the Tri-County, which is Palm Beach County, Broward County, Miami-Dade here in South Florida. It's due to the rise of e-commerce activity, the migration of companies to South Florida, and the desire to hoard materials because of the persistent supply chain issues, brokers and developers have told the Business Journal. Within the Medley Hialeah Gardens area, industrial space went for almost $9 triple net a square foot in fourth quarter of 2021, according to a recent report from Colliers International. So that's a big deal. 500,000 square foot of industrial, FedEx moving in there, taking advantage of the e-commerce growth and the migration of people and hoarders that are keeping their stuff in storage. So what's up next? Let's look at a little hospitality. From industrial to hospitality, this report was from STR Data. It's on CoStar. And it reads, U.S. hotel profitability recovers to 77% of 2019 levels. This is the 25 four top 25 markets beat pre-pandemic profit margins in February. This is by Rachel Ortiz, and she says U.S. hotel industry profitability quickly recovered in February after a slowdown at the start of the year, partially due to the reduced travel and concerns about the spread of the Omicron variant of COVID-19. Gross operating profit per available room, that's GOPAR, for the U.S. hotel industry, a metric that measures the relationship between the revenue and the expenses, reached 77% of February 2019 levels, which is comparable to the highs achieved in summer of 2021. That's huge. Profit margins are also returned to normal levels, with February gross operating profit margins only 1.8 percentage points lower and earnings before interest, taxes, depreciation, amortization margins only 2% points lower than February 2019. Normal profit margins have been a trend throughout the pandemic because hotels have had to adjust to lower levels of demand and employment by operating in a more limited capacity. Labor costs have also as steady as the higher wages many hotel operators are paying out to attract, and retain labor are being absorbed by higher rates. In the top 25 markets, all but 2 markets realized positive GOPAR levels compared to 2019. 4 markets, Miami, Phoenix, Tampa, and Los Angeles, 2 located in Florida, achieved higher than the GOPAR levels they did in February 2019. The 2 markets that realized negative levels were New York and Chicago. These 2 markets have struggled to make much headway with a lack of convention, group, and business travel, and a lower international visitors numbers. However, even in a peak performance periods, both markets realized relatively low GOPAR, $5 for New York and $8 for Chicago in February 2020. Although GOPAR is still negative in these 2 markets, both have realized GOPAR, hard to say, improvements of 141%, New York 172%, Chicago since last year, and will continue to grow profitability as recovery continues. I love when they say this 141%, 172%. Yeah, it's a big number when you're coming from nothing. But that's great to hear that 23 out of the 25 big markets have recovered and are at 77% of their 2019 levels for profitability. It's an excellent thing to hear. That just tells you a good thing about the economy. And everybody knows the economy is doing well. That's why they are raising rates. So, and trying to beat this inflation. What do we have? I've got one more left for Monday morning. And it's kind of like a left ball. Let's see. It says, this is from The Real Deal for South Florida Real Estate News, written by T.P. Yeats. And it's more of a national piece, but I find it interesting. We just had the cryptocurrency week here, or, they're doing a lot of different parties and conventions throughout April for cryptocurrency and online Metaverse. So this article reads, can the Metaverse sell an office building? Miami brokerage thinks so. Firm pitches first commercial virtual real estate deal. All right. In-house commercial founder Jerry Robbins, Metaverse Group VP Matt Sanderdo, and former Miami Beach Mayor Phil Levine, tasked with luring a major tech company to buy an aging office building. A Miami-based brokerage is including a unique sweetener, a digital twin of the property. So I don't know if you heard me right. They're trying to get a tech company to buy an older, real office building that exists in the real world. And they're giving them what they call a unique sweetener of a digital twin of that property in the metaverse. Goes on to say, in-house commercial said this week that it partnered with Metaverse Group to develop a virtual version of the 2 buildings at 930 and 960 Alton Road in Miami Beach, aiming to sell them as a package. The asking price is $25 million. No low number there. If in-house plan succeeds, it would be the first commercial Metaverse combo deal, the firm says. The 2-story office building, majority owned by former Miami Beach Mayor Philip Levine, had been on the market for nearly a year before in-house opted a couple of months ago to pursue the new strategy. Mind you, this office building is 1 block from the beach. It's adjacent to not Fresh Market on Alton Road. It's a primary corridor, Miami Beach. So, and it's been, Philip Levine did do renovations to the building a few years ago. So it's not a bad building, but it's aged. The listing had attracted several prospective buyers, but the firm thought it could fetch a higher price and attract a big tech buyer with a plan focused on virtual world and cryptocurrency. Companies and brands in our line of business were entering the metaverse. We saw there was probably going to be a need for a connection to the real world, said Jared Robbins, in-house founder. Around the same time, in-house partnered with FTX, the Bahamas-based cryptocurrency exchange, to facilitate a sale in cryptocurrency, a move Robbins said has generated much more interest from tech companies. Miami really has become a tech hub and crypto capital of the US, he said. We saw an opportunity to market this asset to that group of buyers. Orlando's Sierra Development, a luxury home builder, is pursuing a similar strategy on the residential side. It will look to get 8 figures for a Miami mansion and its replica in a popular metaverse called the Sandbox later this year. With many companies and brands have entered the metaverse in the recent months, the viability of the virtual real estate business remains untested. For the Alton Road buildings, the expectation is that the buyer will use the digital twin as a virtual meeting place for remote employees, a model that has gained traction among future leaning enterprises. New York City brokerage Serhant, for one, is building out a proprietary metaverse called Universe for the employees and agents. Metaverse Group, a major owner and developer of virtual real estate, so far has only developed renderings of virtual property. It will wait until in-house secures a buyer to fully build it out and select the metaverse where it will live, according to Matt Zanardo, who heads consulting for the firm. For now, the company is leaning towards building the asset in Decentraland, a popular and easily accessible public metaverse where Metaverse Group is a major landholder, Sandro said. A full-scale replica would require about 25 to 30 parcels. Each parcel is 16 square meters. In that virtual world, where the cheapest parcels still sell for more than equivalent of 10,000 in the native cryptocurrency called Mana. Ultimately, the buyer could buy the land or lease it at a rate of about 2% of its total cost per month. If the company decides security and privacy is priority, it may choose to build it in its own closed, walled garden, comparable to the virtual worlds some major enterprises and universities are building for employees and students, Sandra said. Levine bought 960 Alton Road in 1996 for $1.6 million and has used it over the years for his political campaigns and business ventures. Constructed in 1948 and 1975, it comprises of 21,000 square feet of commercial space, according to the marketing materials. The only tenant, Reebok CrossFit, is leasing month to month, Robbins said. And that's not really the nicest place either, where Reebok is. That's pretty much an industrial building built out for a CrossFit gym. Nothing really special there. The asset is being marketed as a potential 63,000 square foot redevelopment play. Miami Beach commissioners in July approved a new zoning ordinance to promote office development on Alton Road. Metaverse Group is a subsidiary of tokens.com, a publicly traded company that invests in so-called Web3, crypto assets, and metaverse business. Will it happen? Stay tuned. Anyways, I'm David McGard. You've been listening to Property Value. Have a great Monday. See you tomorrow. Bye-bye.